Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.4% today. Not what I was really hoping for. We had a nice day up yesterday at 0.9% up, hoping for some follow through so we can say, hey, we're really kind of going into consolidation range and not really kind of creating a downturn. Didn't get back all of yesterday's gains, which is good. We were down a 1% at one point during the day on the S&P 500 and kind of rallied back up. That is, I think, a good sign. So some dip buyers came in and kind of saved the day there towards the end of the day. The big news today was just a couple things. Number one, Moody's, which is one of the ratings companies, came out and downgraded 10 of the smaller and mid-sized banks. Amongst the problems that the banks are having, are really citing some of the things that might be going on in the commercial real estate arena, which is where those banks really, do a lot of their lending. There could be some defaults on some of the commercial real estate as people aren't all coming back into the office space with the hybrids and work from home scenarios that are happening that are out there. So that's a concern. That's something that we'll be watching for. And they also warn that they might be looking at some of the bigger banks with some of their rating, downgrades too. So that made the market a little jittery. But also China came through with some surprisingly weak, export data, which, it's the second largest economy in the world, and they're still kind of struggling to get back on their feet after all the COVID and the lockdowns and things that they did as far as that goes. So, we'll see how that plays out. I'm not as concerned about China only because I think they can do some of the same things that we did here. When Silicon Valley Bank went out of business, the government stepped up and put some programs into place to kind of backstop the banking system to a certain degree, and that seems to have worked fairly well. And I think China has a very political situation where they're going to be kind of required to try to keep things rolling as much as possible. They have done some stimulus programs just recently. They've actually been cutting rates over time here too. So I think those types of things can continue and maybe make the China situation okay. There's a limit to all of these. We can't backstop everything, but the things that are happening right now are probably within reason to be handled. We'll see how that plays out. But altogether, what we're looking for here is some kind of continued softness. I talked about this now almost 3 weeks ago that this was going to kind of happen. And, everything's within the realm of what I was expecting as far as that goes. You'd like to see some kind of sideways type motion here, but that's not always how it works. We did have a big run up. What you're really looking for is kind of that, just a breather for the market for it to come down and kind of settle in so that, maybe some other buyers come in and start to move this thing again too. There will be one potential catalyst one way or another on Thursday. The CPI report, the Consumer Price Index, will come out for the month of July. That's been going the right direction so far, especially on the top line, including food and energy. We're down to 3% on CPI year over year for the last report. So we'll see if that comes down even lower. The core inflation has been a bit more sticky. So, we'll see how that plays out. But nonetheless, that's what's kind of going on right now. Not a terrible day, not a great day. So it's kind of, we're waiting to see how this is going to play out as we head into Thursday. So look forward to talking to you tomorrow. Thank you very much.